Tesla and Twitter CEO Elon Musk has shared a massive incentive to move money out of bank accounts, citing a significant interest rate gap created by the U.S. Treasury and the Federal Reserve. As more people and companies realize this, bank depositor flight will accelerate to extreme levels, even for banks that are too big to fail, Musk warned. Tesla and Twitter CEO Elon Musk shared Monday a massive incentive for people to move money out of bank accounts in the U.S. His statement was in response to Twitter user unusual_whales, who quoted Hugh Hendry, founder of Eclectica Asset Management, who ran the hedge fund for 15 years, predicting that the U.S. Treasury
wants his $258 billion Dogecoin lawsuit thrown out. And David Schwed of Halborn shares whether we should expect more crypto hacks in 2023. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Crypto prices are mostly flat to kick off the week. By noon Eastern, Bitcoin traded around $28,000, Ethereum traded around $1,800, and Solana was worth about $20. Okay, let's talk about the top stories. First, crypto exchange Bittrex is shutting down its U.S. operations due to regulatory challenges. The exchange made the announcement in a tweet on Friday afternoon, noting that Bittrex US will wind down its operations on April 30th. Bittrex said all customer funds are safe and available to withdraw. The exchange also stressed that the decision does not affect Bittrex Global, which only serves customers outside the U.S. In a news release, the company's CEO in the U.S. said the decision was a, quote, direct result of continued regulatory uncertainty, and alleged that policymakers in the U.S. are, quote, seemingly committed to extinguishing the industry and sending it overseas. Next, Elon Musk just asked a judge to toss a $258 billion racketeering lawsuit accusing him of running a pyramid scheme to support Dogecoin. Investors accuse Musk of deliberately driving up Dogecoin's price over 2 years and then letting it crash. They also claim the move generated billions of dollars in profit at the expense of other Dogecoin investors, and that Musk allegedly knew the cryptocurrency lacked intrinsic value. In a Friday evening filing in Manhattan federal court, lawyers for Musk and his electric car company Tesla called the lawsuit a fanciful work of fiction over Musk's, quote, innocuous and often silly tweets about Dogecoin. The lawyers argued that investors never explained how Musk intended to defraud anyone, and that his statements, like Dogecoin rules, were too vague to support a fraud claim. The lawyer for the plaintiffs told Reuters that his clients are more confident than ever that their case will be successful. Last, Binance, the crypto exchange's CEO Changpeng Zhao, and crypto influencers, including an NBA player, have been hit with a $1 billion class action lawsuit for allegedly promoting unregistered securities. The suit comes days after the CFTC sued the world's largest crypto exchange by trading volume and CZ for willful evasion of federal law and operating an illegal digital asset derivatives exchange. On Friday evening, the Moskowitz law firm filed the class action lawsuit for allegedly promoting, assisting in, or actively participating in Binance's offer and sale of, quote, unregistered securities. The co-lead counsel, Adam Moskowitz, argued that Binance could not have arisen to such great heights without the massive impact of the influencers who, quote, hyped these unregistered securities for payments of multi-million dollars. He goes on to argue that the harm suffered by the plaintiffs was, quote, directly and proximately caused by the deceptive and unfair practices of the defendants. We reached out to Binance for a comment on the class action lawsuit, and in a statement, a spokesperson told us that the crypto exchange is committed to a safe and secure platform for its global users, adding that the company will not comment on pending litigation, but that the firm plans to, quote, vigorously contest the untrue allegations in the lawsuit. All right, on to our main story. Crypto World's Jordan Smith spoke to David Schwed, the chief operating officer at blockchain security firm Halborn, about the state of hacking. He also got his take on how banks are moving ahead with blockchain projects.
I kind of want to start this conversation off by asking, from your company's perspective, from your perspective, what does the crypto landscape look like right now in terms of hacks? Are there any specific areas of vulnerability right now?
There's a couple. The main one is really around code vulnerabilities in smart contracts. So it's not necessarily a technical vulnerability. It's more about business logic flaws. So when you're talking about a smart contract, if it's trying to, for example, say check the balance of a particular wallet, for example, it's those types of vulnerabilities that are generally exploited. It's not necessarily like a buffer overflow or the typical things that you would typically think about or conjure up when you're thinking about a hacker exploiting a particular smart contract. It's the threat actor looking through the code and looking through what is this particular smart contract supposed to do. And then if it's checking a balance before releasing funds and they see that this particular check doesn't wait for the balance to be confirmed before it will credit somebody's account, it's those types of exploits that we're seeing are more common than an actual vulnerability within the code itself.
Yeah. And Halborn just recently found a 0-day hack affecting around 280 crypto networks. Can you talk about that vulnerability and what you found?
Sure. So that one, unfortunately, is the complete opposite of what I just talked about. So that one was an actual vulnerability within the code itself. So that one, at the end of the day, if a threat actor was to exploit that particular vulnerability, they would be able to take validators offline. And by taking the validators offline, they would be able to launch a 51% attack by gaining control over that particular network.
Yeah. So last year was a record year for hacks. Do you expect another big year for these types of security breaches, whether systematic or individual, in 2023?
I do. Unfortunately, I don't see security really elevating. There's a lot of projects that are getting funded. So they're getting, seed funding of, 13, 14, 15, $20 million, which is a lot for a company to launch a product, but it's not enough to have the same type of security that we would typically see in a bank. And we're talking about the same level of funds, right? We're talking hundreds of millions of dollars into the billions of dollars potentially that are locked up from a TVL perspective. So you would expect or want the same level of security that a bank has. But unfortunately, these projects are not able to spend the same type of budget that a bank has as far as, internal security teams, multiple external assessments from different auditing firms, bug bounty programs, physical and logical network isolation. I mean, there's so much that goes into protecting, say, a bank that unfortunately is not able to be replicated. So I don't see anything fundamentally shifting. I am pretty bullish. There's a bunch of Web3 security products that are being launched. Some of them are in stealth and some of them have come out of stealth. And I think they're all attacking the problem from a different perspective. So I'm hopeful that things will hopefully start to slow down, but I don't see anything material that's happening from 2022 into 2023 that, in my opinion, would reduce the amount of hacks that we're seeing.
You mentioned banks, which is a perfect transition for the other major story that's happening right now. You actually came from a TradFi background, eventually becoming the COO of Halborn, but you were the head of digital assets technology at BNY Mellon. So I have to ask about the collapse of SVB, Silvergate, Signature. Do you think that there is going to be a wave of hesitance to adopt crypto or Web3 technology in the banking sector after the collapse we've had? Because whether or not crypto had anything to do with the actual failure of those banks, it seems to be that there is a critical mass of people who was putting the blame on crypto or that type of technology right now.
I do. Unfortunately, I am already seeing it. I am seeing, again, just from conversations with, not necessarily BNY Mellon, but just, conversations from colleagues in TradFi, where there's a lot of apprehension from upper management and from the board of whether or not to greenlight, moving forward in particular areas. So they're definitely building, they're definitely exploring, they're definitely, architecting the products. I think there's going to be a slowdown in releasing those products, to the masses. But I think it really comes down, honestly, to, lack of expertise and a lack of, education within the bank. So I think it's really more about fear of the unknown necessarily than actual substantiated, risk.
Yeah. Not to have you call out any of your former colleagues, but we heard from in Davos, a lot of big banks say that they are still exploring blockchain technology. You just said that they're still building. Is there a particular area of focus that they are still interested in that, yes, they may go slower on, but they still want to build out the technology in their own way? Where are they sort of focusing right now?
Tokenization, 100% tokenization. I think, listen, custody is probably one of the scariest things right now in crypto. That's the keys, sorry for the, the pun, but, it's the keys to the kingdom, if you will. So I think, just the amount of risk to take on to custody the keys, I think is scary for the larger banks. But I think tokenization is a way for them to productize some of their existing, products into this new crypto world. So I think we're going to see a shift from custody into tokenization.
Do you see tokenization of securities on Wall Street, or is this tokenization of other assets like deeds, mortgages, things like that?
It's really everything. The the colleagues that I have spoken to in TradFi, it's really, they're first figuring out how to actually tokenize. And then from there, it's really just working with the individual business units, from a business perspective of how can we use this new technology to productize. So I think we're going to see tokenization of everything. And I'm also bullish on, I think we're going to start to see, more of the crypto rails, for traditional banking finance. So you might see like the on and off board in traditional fiat, but I think we're going to start to see the digital ledger technology, and I'm using that term purposefully, not crypto. They're using digital ledger technology as a way to either, replace or, maybe enhance their existing, infrastructure.
Okay, that's all for Crypto World today, but we are back again tomorrow, and we'll see you then.